optimists would be more than pleasantly surprised by the sharp recovery which the Indian economy has exhibited. Overall macroeconomic stability would be restored. Concerns of the credit and financial system remain an ongoing challenge.
Hello and welcome to the Quint, Hindi Quint and Bloomberg Quint. You are watching Rajpath and we have a very special guest, Mr. N.K. Singh. He needs no introduction. He just released a book, his autobiography, Portraits of Power, half a century of Ringside view. This book has been talked a lot about, but currently because we are now waiting for the budget, so we must exploit his availability to us by asking very basic question. What is your assessment post-pandemic economic recovery of India? How is it panning out?
Well, I think that the Indian recovery process will confound even the optimists by the sharp recovery which the Indian economy has exhibited. Yes, it is true that in Q1 we had a negative of 23.5 or something, but that we had the most severest lockdown of 85% more than any other, and this was expected. But the sharp recovery in Q2 itself has been very significant. I expect this to continue in Q3 and Q4, and next year, really, given the fact that in the previous year, there will be, of course, a contraction in the overall numbers, given the fact of the Q1 factor. And also the fact that the pandemic is not totally gone, but nonetheless, the next fiscal year after this will show a very sharp upturn. The question is really that how do we see the picture thereafter in the subsequent period of a few years? And that, I think that considering the importance of economic reforms, far-reaching economic reforms which have been undertaken, difficult economic reforms which have been undertaken in education, in health, in infrastructure, in power, in many other segments, I think will place India's growth trajectory back to where we would like to see the growth trajectory, namely in the real GDP growth of 7% or so, which when added with the nominal GDP, if you expect inflation to be close to 4.5%, close to the band, then a nominal GDP growth, which is using the real and the nominal, close to about in the region of 11-12% or so would be quite realistic to expect.
Looking at current state finance, government finance situation, how do you think they are going to fund such a massive expenditure for the kind of growth target you are giving them?
So I really think that there are two factors. First and foremost, I expect a sharp revenue rebound as well, because when the nominal GDP growth rate picks up, clearly the revenue buoyancies are a function of the growth of nominal GDP. I expect revenues of both the center and the states to also look up more sharply than would have been anticipated. And I think that the efforts currently underway to improve the GST has beneficial impact both for the central finances and the state finances. And this effort, I'm sure the continuing tax reforms are likely to yield one multiplier. Second, I see a revival of the private entrepreneurial activity in the country, more significantly based on some of these important economic reforms which have been undertaken. And I think that with a combination of both these two, I expect that you will see a much higher growth picture. The states, I do believe, as I have said earlier, that in regard to when it comes to fiscal deficit, we need to recognize that a fixed point on fiscal deficit may not be the answer. We need to have a range of fiscal numbers, both for the center and the states, recognizing not the issues of the adjusting the fiscal numbers to cyclicality, because it's often difficult to predict cyclicality. But looking at the realities of the fact of the pandemic and the recovery process thereafter, we need to have a fiscal range. And we need to also take, therefore, a recalibrated view on the debt numbers. If you recall the last FRBM Act, which had been done, I had recommended a fiscal deficit of around 3% to begin with for the first 3 years, and then going up to 2.5% for the central government. And equally so, the state governments are bound by their own FRBM Act, which is 3%. So I was expecting the fiscal numbers to be in the region of both the center and the states taken together, no more than 7% or so. And the debt, an ideal debt for a country of India's per capita income and so on, would be 60%, 40% of the center and 20% of the states. But I know that these numbers would need to be recalibrated, because currently the estimates on the overall debt is in the region of about 85% of both the center and the states. But as I can see now, the recovery process, the improved revenue buoyancy, the retiring of some debt, hopefully, improvement in the overall economic recovery process and the important economic reforms, I see that this ballooning debt number will also moderate. And we can see 3-4 years down the line that instead of the debt to GDP moving in the northward direction, a downward movement of the debt to GDP. And I see, therefore, that the overall macroeconomic stability would be restored. Now, the important point which is also there is, I have said many times earlier that even while some people think that I'm a fiscal hawk, having been the head of the FRBM committee, nonetheless, having suggested a range on fiscal numbers, looking at the current situation, and that lives are more important than anything else, livelihoods are more important than anything else. Nonetheless, I still feel that even if we take a break from the most preferred path of debt and fiscal numbers, it is equally important to give thought to how to return to the path of fiscal rectitude and a return to the path of debt consolidation. So the path of exit is easier. The path of return is always more problematic. And I am concerned right now not on the issues of the forbearance, both by the central bank and fiscal forbearance, if I may say so, of the central government and equally of the states. I am concerned about the withdrawal of the stimulus and ensuring that it is orderly and is not disruptive to the economic recovery process.
Right. You may disagree, but the anecdotal feedback we get, and there are some numbers to argue, that the number of poor credit growth doesn't really support the assumption that private sector is actually getting enthusiastic to get back to business because they are badly constrained.
So 2 points. One is the credibility of these anecdotal details, because these anecdotal details fail to capture the activity in the informal sector. Now, there are two views about the informal sector. One view, which is the obvious one, that they have been hurt much more than the formal sector. But we don't know, since agriculture continues to be very robust, and since every parameter relating to the agricultural activity in terms of the sale of fertilizers, in terms of the sale of the seeds, in terms of the other inputs for agriculture, look all very robust. And the agriculture is one sector which seems to be booming. And a large part of the informal sector is deriving its livelihood from the agricultural sector. They're engaged in the agricultural sector. I think that these anecdotal episodes do not add up to the picture that there is very severe credit restraints. Having said this, let me say that we have a long way to go for repairing our financial system. The problems and concerns of the credit and financial system remain an ongoing challenge. One of the issues which remain unattended or not adequately attended or not adequately given priority attention was the reform of the overall financial system in this country. And the bankruptcy thing was an important decision, but we'll have to see how going beyond that, how the repair of the financial system and what is known the twin balance sheet problem is finally put to rest.
In your book, you have spoken very passionately about Indian dream and the potential this country has. We must realize. I want to understand from you that the kind of steps we all hear about or you recommend, are they enough to realize our real potential?
Well, that also depends upon how you want to define real potential, because potential rate of growth, economists have different models on calibrating potential rates of growth. One rule of the thumb is to take an average 30-year average rates of growth, and that will place our potential rate of economic growth and current things at about 7.5%. But that also depends upon total factor productivity and some of the other factors. Now, the one joker in the pack, in my view, technological disruption and technological innovation. And I think technology, has a great power, and the innovation connected with technology has a power which can be transformative to any mechanical multipliers. As I can see, the far-reaching impact of the adoption of the newer technology of 4G or 5G. Actually, I'm emphasizing 4G because large parts of India are still trapped in 2G. But anyway, 4G, we must aim, and 5G going beyond it, will have a transformative power in education, in health, in agricultural productivity, in every way in which economic activity, and that can be, if you ask me, not an incremental change, it will be a quantum change which we cannot mechanically calculate.
Some of us worry about the ownership of these technology innovations, because the ownership is going to be with those people who are facing a serious backlash. Globally, you have seen what is happening in especially US and European Union. India will always be dependent and not in control of using technology to its advantage.
Well, I think a couple of things. First of all, I think that it's quite sad that the public sector company, which is there in the telecom sector, I'm thinking of BSNL and MTNL, have been allowed to languish, and how to really rejuvenate the public sector players, because the public government must be an important player in such a vital aspect of that. Second, I think that if you ask me, the fostering of the partnership with the best technological companies abroad by Indian companies, whether it be Jio, whether it be Bharati, or whether it be others, this partnership, if it is strengthened, then Indian companies will continue to have a say in the way in which these technologies can be put to actual implementation process. But I think that what is therefore necessary is to promote a policy which enables Indian companies and Indian players to become increasingly more and more influential than being dependent on the foreign companies. This is an aspect but we cannot shut ourselves from the multiplier gains which these new technologies have to offer, or the platforms which can create a multiplier effect on economic growth.
Last but not the least, because you have done a very serious work on 15th Finance Commission, recommendations are with the government. Is it realistic to hope that some of the ideas may find space and will be implemented in the budget, or we will have to wait for it to unfold?
Well, our obligation to the president was to submit our recommendations. we have done that in good faith and using our best judgment. As always, the reports of the Finance Commission fall broadly into two categories. The first category is the financial category, financial recommendations, which have been treated, given the history of the 14th earlier Finance Commission, they have been treated as awards and not recommendations. So the first is the financial recommendations, namely what percentage of the total divisible pool rests with the central government, what percentage should go to the states. And from within the states, the formula which is devised, which state gets how much of the divisible pool. And then there are recommendations which we have in relation to grants, which are revenue deficit grants, third tier panchayats, disaster management, and sector-specific grants. All these taken together, what is known as the FC transfers and the non-FC transfers. This is the financial component of the Finance Commission's recommendation. There is a second component, which is of policy changes. Say, for instance, the examples earlier Finance Commission had recommended, to give an example, of the setting up a fiscal council. This was done by the 12th, the 13th, the 14th Finance Commission as well. That's a non-financial recommendation. Altering the framework on the fiscal framework, this is a non-financial recommendation. Improving state finances through improved debt management systems, non-financial recommendation. And so the two of them have to be segregated. What will need to be watched is what kind of an action taken report by way of an explanatory memorandum, which the government places along with the Finance Commission's recommendation. How do they treat both these in some ways? History has shown that whereas the financial part of the recommendations have been accepted in the past, the non-financial part of the recommendations have been acted upon in a manner which has been considered appropriate by them, some accepted, some, as they say, still under consideration.
So, because I think there is an urgent issue on the table, which is about the federalism spirit, the spirit of federalism. And there is an issue of trust deficit, because we can't separate politics from the federalism spirit. Are you worried on that front, that there is a trust deficit?
Well, in my view, frankly, I don't want to predict, or I don't want to really make a comment which may be premature. I think that the recommendations of the Finance Commission as a whole, we hope, will reinforce the trust deficit, if any. Although I believe that this trust deficit is an exaggerated concept, because take, for instance, the consensual way in which the leadership has handled this entire issue of the pandemic. The role played by the state governments, by chief ministers in a very consultative process, if you ask me, has reinforced the federal trust. The manner in which finally on the whole issue of the GST compensation has been settled has reinforced federal trust, because the central government adhered to its commitment, namely that for the first 5 years of the GST, any shortfall in the 14% would be made up by payment from the cess fund. And if the cess fund is inadequate, then through enabling market borrowings to take place, reinforce federal trust. So I think that this concept of federal trust deficit is really, if you ask me, totally exaggerated and misplaced. Examples have proved that there is no way in which this deficit has been allowed to be diluted. But as I said, and I have said so earlier, that a continuous consultative process between the center and the states, which involves, in my view, I have said so publicly, that may involve a revisit or the 7th schedule of the Constitution, which I think has become to some extent obsolete, given the practice to which it has been subjected to, or, for instance, the use or misuse of Article 282 of the Constitution, by which the centrally sponsored schemes have been taken up in innumerable numbers. All these taken together need to be revisited through a consultative process and a group to consider the future of those features of the Constitution which have a bearing on the issue of the division of functions between the center and the states, keeping in mind the changes which have taken place since the Constitution was originally framed, and keeping in view the growing interdependence of not only India and the world, but the growing interdependence of the states and the far-reaching changes which technology has to offer today. I think many of these things require a fundamental revisit. But I believe that while federal trust exists, federal trust can always be reinforced.
Very true.
Federalism can be malleable, trust is not, and reinforcing federal trust would be the way forward.
Very important points at a very opportune time, because the entire policy maker or all stakeholder communities, they are looking at some serious fundamental changes the way we conduct our business as far as economy is concerned. Once again, congratulations, sir, for your new book, and thank you for your time.
Thank you very much. Thank you, Ranjit.